Okay, hello everybody, and welcome to this week's edition of Selfwealth Live, the Selfwealth, this technical analysis edition here for another week on the 26th of August. We must be coming close, 2025 to 2 years. I've got to double check. I haven't checked that, but I think we're pretty close now, Jace, that 2 year mark, and I can't believe how quick it's gone. And on that note, we're always getting some great compliments. One which I'll mention later on from a client who's also got a great question on this show. So it just gives us the fuel to keep on going as well, knowing that we can help people have the confidence in the markets using our systems and technical systems. Anyway, Jace, this is Jason McIntosh to my left. How are you today?
Hey, Roger, I'm good. Good to be back on the show. Yeah, 2 years. Can't believe it's been that long we've been doing the show. So hopefully it's interesting as helping people, and we're going through some ideas, and people are learning about market structure and being able to apply it with their own portfolios, as well as going through always some fascinating stock codes each week, which our viewers get us. So looking forward to a bit more of that today.
For sure. And market structure is actually a really good sort of key term to really wrap your head around. Now, we're not going to get into in this show, but I've been doing a lot around market structure, a lot of analysis, back testing analysis on market structure of late. It seems to be a bit of a buzzword at the moment in the technical analysis. Well, on my feeds anyway. So maybe it's because it knows what I'm looking at, right? All the search engines and whatnot. So, and social media. But okay, all right. So hello everybody on the other side of the line. Thank you for coming today, Bob. G'day, Jarks. Let's get, obviously, if you're new to this show, welcome. What we do is we go through the Aussie market, the US market, and the Hong Kong market, and look at those indices and the price charts. Then we've got a viewer question after that, and then if you've got questions, you can pop them in the chat as well, and we'll try and get to them. And then most of the show, it's having a look at your tickers from a technical analysis point of view, and our way of technical analysis as well, because there's a billion ways of technical analysis, right? So let's get cracking, Jace. Let's have a look at that disclaimer, if that's okay.
Okay, so just a quick note before we start that everything we do today is general commentary only, doesn't take anyone's personal situation into account, and this disclaimer goes through all of that. I'm also not part of Selfwealth or SIFE. I'm a motion trader. That's my business. So my details are at the top, licensing and all of that, and beneath there you'll see the Selfwealth disclaimer going through all those same important details.
Yeah, fantastic. All right. Well, it's been a big, seems like the Aussie market is sort of leading the charge in all-time highs and staying up there at the moment, although the Dow did all right as well. But let's start with that let's start with that Aussie market, if that's okay, James.
Yeah, so we'll get our ASX 200 chart up here. And so prices extended their gains from last week, hitting an all-time high on Monday, pulled back a little bit today, but nonetheless, new all-time high yesterday. So that brings the gains for the month. So from this low near the start of April up to the high, that's 5.7%. That's an extraordinary 1 month gain for a market that's been trending higher. And since the low, so the low back down here in April, that's 27%. So not often we see that sort of gain over a few months. As we've been discussing for several months now, the path of least resistance, it does remain to the upside. And you can see that in the price action. You can see all the dips have been shallow. They've been quickly bought. The pullbacks themselves have been shallow and short-lived. So from that perspective, I think the sensitivity still remains to the upside with money continuing to look for a way into the market. That's not to say there won't be a larger pullback. So of course, a larger pullback is inevitable at some point. But for now, I think it's a case of continuing to go with that trend until we have good reason to do otherwise. And that's been the case the whole way up, go with the trend. I remember hearing some market commentators in May talking about saying, oh, look, let's take some profit after this good rally. And this is why I don't like taking profits, because you never know how far a market's going to run. So rather than taking profits, we've been talking about staying with the trend and like adding to positions as prices have been going up. And that's where we are now. We've had that continued trend. And so with where things are now, prices are somewhat elevated above the 50-day moving average, and we are getting that little bit of a pullback at the moment. They're not at an extreme when I look at this, like how far above the 50-day moving average. And you can see back in May and June, prices were elevated above the 50-day moving average, and that condition can persist for some time. And but look, I think we're certainly at the point where some consolidation wouldn't surprise. The timing of pullbacks is always uncertain, and like, for instance, prices could pause where they near current levels, let the moving averages catch up, or they could extend further. I don't think we should get hung up on trying to pinpoint every turn and trying to isolate exactly when a pullback's going to happen. I think that's a hard way to approach the market. I think it's a hard way to make money. I'd rather focus my attention on the underlying structure and then position my portfolio accordingly. And that structure that we have here, as our viewers will know from what we talk about each week, it's a bullish structure. We've got rising moving averages, both the 50 and the 100-day moving averages are trending higher, prices above the moving averages, and we've also got that series of rising lows and rising highs. And so my aim here is to be positioned with that trend, not trying to trade around it. So yes, there's going to be pullbacks along the way, but rather than trying to pick them and get out and get back in, take profits, buy dips, I want to stay with the trend. That's been the play that's been working. That's what I want to continue doing. Looking at the equal weight, a quick look at that. The ASX 200 equal weight, it's also made all-time highs. Had the briefest of consolidations last week, just a very, very muted pullback before the rally continued. I think what we're seeing in the equal weight, I think it indicates that we've just got that broad-based participation. We talked about a potential for a pause in the equal weight last week, and I still think we're going to get one of those larger pauses. I think maybe even soonish, maybe as we head into September, because this has been an exceptional rally off the August low. That's about 6.6% for the equal weight. But remember, consolidations are positive. They help they can help an uptrend become sustainable. There's pauses along the way. So I think the underlying message I'd take from this is that we've got broad participation in this ASX rally, which is often a healthy sign. So as I've been saying, for me, it's staying with the trend, not trying to get too clever, jumping off, trying to jump back in. It's the trend's where I want to be until we get evidence to the contrary.
Fantastic. The trend is still our friend at the moment. Is it the same in the US markets?
Yeah, so going over to the S&P 500, and well, it's been a week without an all-time high, and that's been somewhat of a rarity of late. We've been accustomed to all-time highs in the S&P 500 with 19. I think it's 19 so far this year. Many of them since around late June. We've seen a sequence of them, but none this week. Instead, we've had a pullback from the previous record high, rallying on Friday, but nonetheless still below the previous week's high. At this stage, I'm viewing this as very much a pause within a bullish trend. Nothing stands out to me as being a warning of a significant trend change. Just looking at the underlying structure, the key factors I'm focusing on are, again, it's the rising moving averages, price above the averages. They're bullish markers. And also, of course, that clear sequence of rising lows, rising highs. It's normal for people to worry when prices are at these historic high levels. And the thing I think to remember is, though, that historically, when we look back, all-time highs tend to lead to more all-time highs, not lasting tops. So, of course, an all-time high will be the final high before a larger decline. But much of the way, the all-time highs lead to those more all-time highs. That's why we stay with trends. And when we consider those factors that I just went through, like the rising moving averages and such, I think the odds favour new highs at least later in the year. The potential for more consolidation is, I think, very much there in the near term. This has been a big rally with only these short pauses along the way, and we're on the doorstep of that seasonally weak September. So it's something to keep in mind. I'm keeping an eye on this is just a potential formation at the moment, potential pattern. People who like their old school technical analysis might recognise the pattern I'm drawing in. It's called a bearish wedge, and it occurs when the price action is losing momentum up near its highs, and then it can stall. And the trigger point for the pattern is a break below the lower trend line. So say we got price action like such, and that's how the bearish wedge triggers. Don't get too hung up on the word bearish. When I say bearish in this context, I'm just thinking about, like, could this be part of a leading into a consolidation rather than a major top? And we could see that pullback to the 50-day moving average, and this remains well and truly within an upward trend, and it would give us that pause that would help correct this significant gain that we've had. So that doesn't come into play unless this lower trend line breaks. But it's just saying, I think, to be aware of, and something that we can keep an eye on. Other than that, I think that, as I said with the ASX 200, it's the underlying trend that has my greatest focus and determines my positioning. And as things stand, this trend remains in an upward trajectory. I think the play here is staying long stocks. My base case is that the trend remains up. And if we do get a pullback, if a pullback like I was just discussing does develop, I think the odds favour it being a consolidation, not the start of a bigger downturn. And that potential for higher levels into year end, I think is very much the base case at this point.
Okay, fantastic. So the main message is don't be too fearful. Just be once again, just be wary of what's happening and having your stops in play as always if something goes south. Let's have a look at the Hong Kong and Chinese market. I think that is playing out to some of our chats over the last few weeks as well.
Yeah. So just with the Hang Seng quickly to start with, rally off the 50-day moving average up to a new recovery high. All the markers here remain bullish. The rising moving averages, price above the moving averages, and the series of rising lows all the way up, I think is a case of being positioned for more upside in the Hang Seng, which is of course the Hong Kong market. The Chinese market, that's particularly interesting, and this is one we've spoken a bit about in recent weeks. So this is now finally getting the lift off that we've been talking about earlier in the month, and it was a little bit slower way start. I thought we were getting the lift off phase in late July, but then prices came back for another test of the 50-day moving average. But then we've got that nice rebound off the 50-day, and now the rally's starting to extend. We've been talking about this potential as prices have been working their way higher with the moving average over the last few months. And I think the biggest clue has been that all these recent rallies that you can see, they've done a good job at holding on to their prior gains, which is something the Chinese market hadn't been doing well previously. Like you can see rallies and they give all the gains back. Rallies, quickly give back the gains. Rally, quickly give back the gains. But then that tendency started to change as we came in, went through April into May. The rallies the gains from the rallies were holding in the pullbacks. So that was a clue something was potentially changing. The next challenge is resistance. It comes in at around 1,500, pretty much where the market is now. So let me just compress this. I'll show you why 1500 is significant. And you can see it links up to these previous peaks from 2015, 2018, 2020. It was a bit of a support area in later in 2020, a support in 21, a resistance in 2022. It shot through it, but then came straight back last year. And now here we are again. So what is this going to be a resistance point this time around? I think this is the potential as being the early stages of a much larger rally. And when we just look at this, you can see like we've got this big rounding base in place. You see how that's the downward momentum gave way to an upward turn, and we've gone from lower lows to higher lows. So you can see the structure has been changing. And like I said with the Hang Seng, we've got those rising moving averages, price being above the moving averages, and of course the rising lows that we now have. I'm long the Chinese market. We talked about that a few weeks ago. We talked about the ASX listed China ETF. There's all sorts of ETFs. I think you can get around this, but there's an ASX listed one we spoke about. I'm happy to stay on board this and give it plenty of room to move around and see where it goes. See if this can develop into something significantly larger. I think that potential is there. Potential is not always delivered, but it's a case of when something's working, just I think stay on it and see how well it can work. See if it can continue working. If it doesn't, that's okay. Close it out, move somewhere else. But at the moment, I think this has some really good potential. May also not be a coincidence that we're seeing some breakouts in the big mining stocks. I'm seeing some motion trader signals in some of the ASX listed mining stocks as well. So I think it's an interesting space to be aware of. I think there's opportunity, and opportunities are continuing to emerge.
Yeah, fantastic. Good to hear. All right, let's get on to a viewer question for the week that was emailed in. First of all, it does give us a great compliment, Jason. Just says over the last year's been Max, his name, has been had a great month in the markets, and a lot of it's due to the confidence we've provided him over this past year with our guidance, right? So it's great to hear. Now the one thing that he asked though there's a question around selling. So let me read it out. So basically, Max wanted to buy LYL 640 units. However, on the sell side, there were only 70 units at $12.31, 240 units at $12.33, 222 units at $12.34, and 313 units at $12.37. If I proceeded with my buy at the market, then limit order, I could have been stranded on 70 units. What strategy do you recommend? Now, that's quite a loaded question, but hopefully you can answer around that, Jace, in general.
Yeah, no, it's I'm familiar with the how the bid and offer in Linus often appears. So Linus has a like, let me wonder what the...
Is that LYL? I think it's LYL, I think it was.
Was it LYL, not Linus?
I believe it's LYL, or it could be LYC.
Okay, it'll make quite a difference because LYL is going to be a smaller company. So it is LYL we're talking about?
Yeah, I'd say that's the general price at the moment.
Okay. So okay. So I was thinking LYC. Okay, so it's a $500 million company. Wonder what I don't know. Let me get a chart for that. LYL, and let's put a volume indicator underneath it. Give us an idea of the daily volume. So 147,000, 81,000, 29, 26,000, and a bit of volume does go through. So for a retail trader, who might want to be doing a few $1,000s worth of shares, there's a fair amount of volume. So that's like 26,000 shares. May not seem like that much, but remember, it's like a $12 stock. So $260,000 thereabouts of stock has gone through on that day, and then you go to another day and it's like a $1.5 million worth of stock. So there's certainly stock on offer. It's not what I'd call a low volume stock. When I go to place an order, I always look at like what's available on the offer. Like, is it like as has been described in this case? There didn't seem to be a whole lot on the offer. There's like 20 shares there and 70 there at the next price. Then might have been 200 shares thereabouts. This is why when I place an order, I typically don't place an at market order. I place a limit. So I'll think about like how much is on the offer and what's the most I want to pay. So I might say there's an offer at $12.20 and $12.22 and $12.23. I might put in a limit of $12.23 and just take up all the stock around that 3 cent bracket if that's going to give me the sort of quantity that I'm after. Other times I might just put in a bid at say $12.20, get some of the stock, and then just patiently wait. And sometimes the price might move away from me, but often when there's less volume on the offer, I often find that's the best way to go forward, kind of waiting for someone to give me the shares rather than trying to chase it higher. Because if there's not much on the offer, you can quickly move a share with not much stock available. You can move it a few percentage points potentially, and I don't really want to do that. So sometimes you just got to be patient with getting filled. Also, buying and selling around the open and the close can also help. That's when there's price matching that goes on. All the stock will clear at whatever the open or the close is going to be. I think use limit orders and be wary of not just paying market and potentially overpaying for a stock.
Okay, fantastic. Thank you. All right, there's a couple of questions in here. Sorry, Michael, I don't really. I mean, it says, why can't I get my question answered? I'm sorry, but I don't really understand your question around the drug company sold off today. It's to do with Trump. And could save your life, years ago. I'm sorry. I apologize. I just don't understand the question. So if you can give me some clarity, and if it's related to this technical analysis, then we're always happy to bring it up. There is one quick one here around 200 MAs. Can you please tell us what your setting is for the time frame when you use a 200 MA? I'm not sure if you do, Jace, but if you do, please let us know. That's from Claudette.
Yeah, look, I don't really use the 200. I occasionally look at it, but I'm mostly focused on the 50 and 100 day. It's not that the 50 and 100 day are special numbers. I could be using 40 and 80 days, or 10 and 20 days. I could be using 100 and 200 days. But I look at some people's charts and they'll have like 6 moving averages on them, and I find that confusing. I don't know where to look. Like, there's always, every time a level breaks, there's another one coming up to watch. So 50 and 100 works for me. That said, there's nothing wrong with using a 200-day moving average either. I use the I was just trying to get settings up, but it's not opening for me. I use exponential moving averages, so I'd use a 200-day exponential moving average. But simple averages work just as well. It's just we've got to make a choice that which one we use. But for me, I like the flexibility of the 50 and 100. They move relatively quickly, but they're not over responsive to every movement in the share price. So it's good for medium. I find they're good for medium term trend trading.
Okay. All right. Fantastic. All right. Let's get on to some tickers now. We'll start off with, Max has a couple here as well, so we'll start off with those. So first one is TLG, please.
Right. So It's some interesting price action gains. So it's been a long period of declining price action. But is this like a basing phase? Encouraging, and the price has now flipped from below the moving averages to above. When it crossed, it did have that pullback to the averages around the same time they've crossed. Prices have now broken to a new high. The averages have started to trend higher. I think there's some potential with this. If I had some, I'd be happy to stay on this as a potential emerging trend. It's one I could consider getting into as well. Is there going to be just another pause in the near term? So it's had that nice run off the averages and pull back. Could we get a little bit of sideways price action while the moving averages catch up, and then that could be a buy the dip opportunity. Alternatively, it could be a case of then buying a breakout from some sort of a trading range should we get that. But yeah, certainly a stock I think is worth following. Could also just draw in some support. So it's broken above these previous highs and just having a return move. So some consolidation above that breakout point could set up that platform for another run. So interesting stock to keep an eye on.
Fantastic. Next one is bet.
Yeah, not dissimilar to the stock we just spoke about in that it's had the large decline. Is this a basing phase? And it's starting to get some rising lows, and it's just broken out from you could say there was. You could describe that as a contracting trading range. It's broken out from the moving averages have turned higher. So I think this is one which, if I was in, I'd be happy to stay in. I like that the pullback so far. It's shallow, so it's holding on to most of these gains from the July low. So I think I could consider. If I wanted to buy the dip, I could probably consider buying it at current levels and then having a stop just back down. I just have to work that out as a percentage before I say that. Yeah, look, that'd be okay. Could have a stop down around 10 cents, so about 25%. Should it get down there, well, then the breakout's probably failed and there's just more sideways chop potentially coming. But if it can continue to hold these gains, it could be setting up for another leg higher. The other alternative would be just watch, see if it consolidates, and then buy a break maybe above the August high. But yeah, certainly the potential of an emerging trend.
Okay, fantastic. Let's have a look at Bob's WTC, please.
So let's see. It's a harder one because I wouldn't say it's actually within an established trend at the moment. We had an established trend, but that established trend was severed by the sharp decline during March into April. So we've had the rebound. It's still below the previous high. It's like this could be all part of a larger range that's forming. For instance, like this could come down, and then this could chop sideways for many more months and form a larger range. If I was in some, say I'd bought some during the rebound, well, by all means I could stay with and see, give it room and see whether it can continue to develop upward momentum. But yeah, I just don't have an established trend to go off at the moment. If I wasn't in it, I wouldn't be getting in it. But yeah, Roger, I just think it's a harder one. Some setups are clearer than others, and for me, this one's just, I think there are other stocks I prefer to have a go at the moment. If I was in it, that's okay. I'm happy to give it some room, maybe back down to around 90 or so, but it's not a standout for me at the moment.
Okay, fantastic. Next one from Bob is Axon, AXON.
Was that yeah, it must be the US stock. Yeah, well, the trend here remains up. It's had a pull back to the averages. It had a strong rally off it. There's probably some news related to that rally. Has given those gains back quickly, which is not ideal. When you get strong gains, I like to see the strong gains mostly held with shallow dips. But this has come all the way back to the moving averages. But nonetheless, the trend's still up. Maybe the pullback to the averages suggests it's not ready to really extend higher yet. Maybe there's some more sideways chop on the way. But this is a stock I'd be happily staying in if I was in it. Wide trailing stop, lots of room to move around, see if it can stabilize around the averages and resume the upward trend.
Fantastic. Next one's from Jacques, JIN, please.
JIN?
Yep.
Yeah, so it remains in a downtrend at this point. It has started to turn higher, but it's still a little bit early for me. The moving averages haven't crossed. It's gone from below the averages to above, so that's a start. That's a positive, and the moving averages are moving close together. So it's starting to build the sort of price action that maybe we could work with, but at this point, I'd just be inclined to watch rather than act just at the moment. It's been a long time without much of a trend in this stock, and the big trending phase was back here during 2019, and that was a great motion trader stock. I had it myself. But yeah, you can see where these green circles are. That's where I've spoken about in the past. That's where I got out, and I haven't gotten back in. And for the moment, I'd probably just stay in the sidelines. If it can now stabilise above the moving averages, and the moving averages cross, well then maybe we've got something in play. Just quickly, let me just see whether that works. We could say there's a downward trend channel which is starting to eat its way through, but still, for me, it needs to now stabilise, hold on to these gains. The averages need to cross, and if it can then maybe trade sideways towards the averages and break higher, well then maybe we have a play. So worth keeping an eye on.
Okay, OCL.
Yeah, trend remains up. Strong upward trend. If I was on it, I'd be staying on it. Probably not buying it just at the moment. It's had a lovely run off the moving averages. Now let's see whether it can hold on to most of those gains. It's come back a bit in the last couple of days, but if it can stabilise at current levels and you could have some support, which probably comes in around those previous highs, ideally it would hold above that around about $20. I want to see it hold 20 and stay above the moving averages, and the trend remains in place. I guess it kind of could be almost like a buy the dip point as well if somebody was interested in getting on board. I'd probably prefer just to watch it for a little bit, but maybe it's sort of getting to that buy the dip point. If it can stabilise above 20, maybe for a few more days, maybe a week or two, well, then maybe that brings in that buy the dip potential, but certainly a stock I'd want to stay with if I was in.
Okay, fantastic. Next one's from Lloyd. Thank you very much for all these tickers, everyone. Don't forget to like and subscribe when you can, if that's okay. CCP, thank you.
It's been a bit of a messy stock. This one over the last couple of years had a few attempts at starting to push higher, but none of them have gone on with it. We're having another attempt now. It's still got it is pulling back, but it does still have the bullish potential to it. I think the key is it needs to stabilize around current levels and just start to build a platform and then start to rally again. If I didn't have this one, I'd be inclined to leave it for now. I'd rather buy this one with more established momentum rather than buying a pullback, just because it has failed in the last couple of attempts. But if it can stabilize here, like if I'd bought this strong push higher, I'd still be giving it. I'd still be in there. I'd probably have a stop, like I'd have a stop back down below probably $14, maybe. Yeah, just giving it plenty of room to move about. But if it can stabilize above those moving averages, it's I think it's still got that upside potential. But it's still like it could still be going through a basing phase. We don't really have like a clear break above previous highs as yet. So I think, if I jumped in recently, I could give this a bit more time to see if it starts to play out. But if I'm not in there, I can continue watching it.
Okay. SIQ.
This one's potentially it could be the early stages of an upward trend. It's had this this down and out period, and this is the first positive cross of the moving averages since since back in early 2024. The key now, so it's gone from below to above, consolidated, got that sideways movement into the averages in another rally. I think holding around current levels is now important. If it can travel sideways, maybe for several weeks, and then start to break to a new high, it really then starts to develop a series of rising lows, and starts to clear some of these previous highs as well. So early stages with this one. But I think it does have that asymmetric appeal to it, in that we can manage risk with a stop back below the 100-day moving average. So if it doesn't fire, we can manage the downside. But if it does run, there's considerable upside potential. So worth it's one of those stocks I'd be happy running with if I jumped on. And if it can just show some signs of stabilizing over the next couple of weeks, it could be a good entry point.
Fantastic. Davina asks around CHL. Been in there, down 20%, been in there since 2022. Wants to know if this is a stock to move on.
Yeah, well,
oh, sorry, I've said the wrong. It's SHL. Did I say SHL?
SHL. Lots of people get stuck in these stocks that go into these longer declines, and they might be at a high and they start to pull back, and people may hold on, and then they think, oh look, I'll give it a bit more time, it'll go back to its old highs. But then the downward trend continues to evolve, and then before you know it, you've given back. You're a long way down. You might be down 50-60%, and then gets hard. Like, what do you do then? And a lot of people say, look, I'm down 50% or I'm down 60%, so I might as well hold in long term now. But can we be sure a down and out stock is going to go back to its previous highs? And the answer has to be no. We can never be sure. We don't know which ones are going to make the great recoveries and which ones are just going to languish for a long time. I don't know which basket Sonic will fall into. It's we only know when we look back. Although I don't like the chart structure as it currently stands. It looked like it had some recovery potential, started to develop around August. Prices started to break high. The moving averages had crossed. prices were back above the average. So we started getting some positive structure, but that doesn't mean that a trend's going to develop. It just means that something's on the right half of the field, above the moving averages. But it doesn't mean we're going to get that upward trend really engaged, and it hasn't on this occasion. It's quickly reversed, probably on the basis of company results, I'm guessing. So as it stands now, prices are making a breaking below the April low. It's just negative price action. This wouldn't be in my portfolio. I would have cleared it out a while ago had I had it, or if I'd bought in any of these potential recoveries, I would have closed it when the price action reversed. I can't say to anyone, you should sell this now, because I don't know. Maybe it bottoms today and then goes up. So I can't see the future with it. But I do know at the moment it's not a stock I'd be considering buying, because it is still in a downward trend. How much longer or how much lower the trend goes, we don't know. But it's about, for me, I've got to protect my capital as best I can. So when good opportunities come along, I've got capital that I can put into them. If I tie up capital in underperforming stocks, one, I'm losing capital in the underperformers, and then I'm not making potential gains in the stocks that do start to perform. So it's personal call what to do with these things, but I think try and think about your exit strategy so you don't find yourself in a position of being down 50 or 60% at some point. Try and maybe have a plan to have taken action before that situation develops.
Yeah, and I think I can relate to that a lot, actually. And I'm looking at one of my portfolios, which didn't start off as a motion trader portfolio, right? So you can only know these things and when you stumble across them through education, right? But one of the portfolios I have is sitting on about six losing trades, which are probably around about 60 to 70. Even one's 90% down, and I'm too afraid to sell them at the moment because I just lose too much money. But at the same time, it's one of those things where you're sitting on these stocks, which had I have known what I known back then, I could have had more capital to play with, right? But now I'm fully invested in these stocks. I've got to make a decision. Do I just cut my losses and get whatever's remaining out of those stocks and try and rebuild that portfolio knowing what I know now, right? It's a tough decision. We can't make that answer for you, right? But I certainly relate. I can relate to not having capital because it's stuck in these stocks that are just so far down now below the general 25% I use now, right? General stop loss of 25% now. Tough situation.
So it's an interesting question. Do you clean out a portfolio or do you hold in? And it's like, questions that I ask, it's like, would you buy any of those stocks now? And if the answer is no, I wouldn't buy them now, well, then you think, well, if I wouldn't buy them now, should I continue to hold them? And sometimes the answer would be yes, because it's still above a trailing stop or still above an initial stop, so you're giving it some more time. But other times you say, well, I wouldn't buy it now, I wouldn't consider it now, so why would I continue holding it now? And there could be a reason, but there's things to ask yourself, and then also, like you said, something interesting, Rog, about like you said that if you sell, you make the loss. It's like, I think a lot. It's something we all kind of think about. It's sort of like we think, oh well, once I sell, I've lost that money. But I think the reality is that the value of the investment is worth what the market's prepared to pay you today. So you could argue that the money's already lost, and then it's a case of like, is this a place where is this an investment which I can make money? Or is it a place where I'm just hoping to recoup money? And you got to I think we've got to balance all that up and go, well, what should I do with those stocks in my portfolio, which I wish I didn't have anymore? And sometimes it's just a negative, opening up a portfolio and seeing languish in stocks that you look back with hindsight and say, I should have done something else. And I've had those stocks myself where I've made a mistake, and in the end I've decided, look, I don't want to look at it every day. Just
Yeah.
get rid of it. I've done the wrong thing. I mucked something up, or I didn't follow something, or I should have done something differently. So I've just be gone with it because it's just a negativity. I don't need it. I've learnt my lesson, and now I want to like move forward and be able to rule off on it and not be reminded every day that that was a mistake. I know it was a mistake. Now let's be positive and look at what's working and take things forward that way. So things to consider. There's no right or wrong answers. Everyone does what's best for them. Just just thinking points, I guess. And just with this, like you can see, I put these blue lines on. Like, is it breaking to the downside of a range? So yeah, there's not too much looking positive about this stock at the moment. Of course, we don't know where it ends. We look at it in 6 months' time. Who knows? Maybe it has staged. Maybe this is a false break and it stages a great recovery. Entirely possible. But we could also look at it and see it's down at $18 because it continues to unravel. You got to say, like, if it's down at $16 and unraveling, how do I feel about that? And if that's like untenable, well, you do something about it now. If you go, well, look, I'm prepared to wear it, well, maybe. So all depends, just thinking through a lot of things and then I think trying to systemize our approach so we don't need to be making these decisions and we can be rules-based and go, okay, it's hit a certain point, this is what I'm doing, rather than going through the agony of going, well, what should I do now? Because I know it's hard, really emotionally difficult to make some of these decisions.
Yeah, 100%. And look, I think you've answered that perfectly. Even though you kind of know it, but at the same time, you're holding on to hope, and that was my hold and hope portfolio strategy, which I'd started well before we started these shows, right? And it's kind of like it doesn't make any sense sometimes just to continue holding at these large losses now, thinking that they're going to go up one day, right? It doesn't really make any sense. But all right, let's move on. Adrian, TLX, great conversation, by the way. Thanks for starting that one, Davina.
Yeah, not happening here. Breaking down. Well, it's already broken down. This would have been a motion trader stock, and it would be it'd be out of the portfolio now. It's that would have triggered a wide trailing stop. If I had this one, I would have already exited it. I wouldn't be thinking of buying the dip because the dips I want to buy are the dips back to rising moving averages. They're the dips I'll consider buying. When breaking below declining moving averages, I don't want to be buying those dips. For me, they're too risky. It's like, is this, like, we don't know. Like, we've just had that conversation about we don't know what the future's going to hold. Could this continue to unravel? It certainly could, and that's what I don't want to be involved with. If it bottoms now and then rallies, well, sometimes we get that will happen to us. But I'd rather sell now, or sell somewhere over the last few weeks and watch it rebound, than hold on and continue to watch it unravel. That's how we end up with that dead weight in the portfolio. So yeah, for me, it's not a buy. It's a stock I'd be out of. If it does stage a recovery, we can look at it again then. But yeah, it's not doing any of the things I want in a stock I'd be holding.
Okay, fantastic. EIQ.
Yeah, look, it's now below the moving averages and spending time. It's made a new low. I'd be if I wasn't already out of this, I'd be now considering thinking, where's my exit point? Where am I getting out? If I'd bought it at good levels and I'd got that initial gain, that was all great. But now it's just not. It's starting not to work. And we'll get these stocks that look to get off to good starts and look to be doing stuff and then just fail. And that's all part of it. Like many stocks, many trends just don't go on with it and produce those big gains. So there'll be plenty of disappointments which look good but don't live up to their potential. part of the game. So I wouldn't be buying it. I'd either be getting out or have my level in place. Maybe it's the August low, maybe a break below the August low. If I was just putting a discretionary stop, if it was a motion trader stock, I'd be using a calculated level. Yeah, it's look. Sometimes these stocks, they do have this time below the moving averages, and then sort of like make their way back up. So it's not to say this stock is going to come all the way down to back down to where it was in started 2024, but it's vulnerable. It's at a vulnerable stage when it's consolidating below the moving averages. As I often say, the bad stuff tends to happen below the moving averages. So will this be a situation which, like in 2016, where it got below the moving averages, started consolidating, and then completely gave way? Or is it going to be a situation like 24, where it came down, spent some time, but didn't get a momentum and went back up? We don't know, but the risk of getting the former is why I don't buy dips below moving averages. So I think tread carefully with this one. If holding it, it really needs to hold the line, I think, at current levels and not give too much ground, or it does risk starting to unravel to the downside. So knowing where my exit level is would be very important with this one.
Okay. Roberto is MEI, please.
Yeah, look a promising trend that's not delivering. Like, this all looked really good. Below the moving averages, above. We've got the sideways consolidation into the rising moving averages, got the breakout. If we're looking at here, I'd be saying, yeah, this has got some potential. This is great. Let's I'd be happy to have a position, stop below the 100-day moving average and see where it goes. But as I've been saying, not all trends extend into large upward advances, and this one so far hasn't. It's come pull back. So that was the first warning sign, in that it gave back pretty much all of those gains from July were given back. It didn't have a shallow dip. It didn't have that shallow consolidation. Rebound off the averages, then a quick move below. I'd be, if I'd bought the breakout in July, I'd be inclined to be getting out probably after that, using this rebound to get out, because my reason for buying was probably the breakout, or the rally off the moving averages and going with this early momentum. But that reason for getting in hasn't played out, because we've had this fall. So I certainly wouldn't want to be buying at current levels. I could also say, look, I'd use the August low as another potential exit point. Maybe giving it the benefit of the doubt, because it could stabilize from here and continue to make its way higher. But it's not doing so in a fashion that is clean and simpler to trade. It's quite a volatile. It's volatile price action, and I don't like the sharpness of the decline. So if I wasn't in it, I'd be watching it. A break above the, I think it would take a break above the 19th of August high. I think that's 19 August. Yeah, 19 August high to get some upward momentum to it. If I was in it, yeah, I'd be really thinking about, do I want to stay in it, or do I want to give it, how much more room do I want to give it? Maybe the August low. Yeah, but it's not doing what I would have liked to have seen.
Okay, fantastic. Next one is from Hassan, EUR. We've already done TLX, Hassan, as well, but let's do EUR.
Yeah, trend in place. Happy to stay with it. It's one of the better performing lithium stocks at the moment. Yeah, look, I'd be happy to stay on this trend, see where it goes. The moving averages, the rising lows, all of those things are in place. particularly if I was in it at good levels. I'd be giving it lots of room to move around, probably stop back. I'd be using a calculated motion trader stop, but at least I'd be below the 100-day moving average for a wide stop. I'd probably, if I was thinking of buying, I'd probably be having had a bit of a run away from the 50-day moving average. I could probably give it some time and see whether we get a consolidation as a possible entry point. But yeah, I'd be happy letting it run.
Okay, fantastic. Next one is from Irfan. Thank you very much for the praise. A1G, please.
Must be this US listed one, AIG. Well, it's range bound at the moment.
Is that A1G? Sorry, did I say A1G? Sorry.
A1G. That one there. Yes. So this is yeah. Well, it's a strong upward trend. It turned up in it's been in the motion trader signals a couple of times. If I was on this, I'd be staying on it. I'd probably hesitate to buy it at current levels just because it does seem quite stretched above the moving averages. But that doesn't mean that it can't do well from current levels. Maybe it needs to pause and consolidate, and maybe it will run again. It's certainly a stock I'd want to stay on if I was in this stock. And it's interesting. It's a low price stock, which is really moving up in the world. And it's been a nice trending stock as well. Like you can see, a nice clean range which it broke out from, and there's another clean range which prices broke out from. Unlike MEI, which has been quite a volatile range, this one here has been more of a trend with moderate dips and consolidations, which has developed well. So yeah, one to a trend to let run and see what comes of African gold.
Okay, TYR.
Interesting price action in that there's today's opened, there's the low, and it's currently trading up at its highs. Yeah, it's interesting. It's done that a few times. There's the open, the low, and then there's the close. Yeah, that's interesting. If I was in this one, I'd be staying in it and seeing whether, because it is a trend which is developing. It's gone from below the averages to above. We've had the sideways period. The averages have crossed. Averages are rising. Break to a new high. Consolidate. Break to a new high. Consolidate. I could even probably consider buying it at current levels and then having I wonder how big that stop would be. Probably needs 20%. I'd probably give it 20% if I was doing it, just giving it that room. Although it probably shouldn't break below that low from today if it's going to be bullish. So it could probably be done on a more aggressive, say 12 or 13% stop even. Just given the price action, given how that low was rejected today, if it found its way back to that low and broke again, it's probably not a good sign for the stock. So maybe it could be bought at current levels with a relatively close stop, and just see whether it's got a bit of a stepping pattern. So there's a step up, there's your landing, step up, landing, step up, landing. See if it continues to step higher. Yeah, I'd be happy to let it run. I could consider buying it at current levels. Whether it turns into a great trend or something mediocre, only time will tell. But it's got the makings of something which could get interesting. So worth having a look at.
Okay, the next one's from Shailendra. It's CU6.
Okay, so we're back above the averages, and we've had the initial pullback. Averages have crossed, so it's maybe, I think the key now is it's got to stabilise just around these averages. Don't really want to see it start drifting back down. Having a deep pullback below the averages. I think for this to continue, for this to look its best, it needs to now consolidate on the averages, get that platform, and then start to rally off them. It's kind of how Drone Shield started to make its way up. It also had a big boom, it had a big bust, and that's how it made its way higher. It sort of got back above the averages, consolidated on the averages, and then so on, and ended up making its way higher. I probably wouldn't buy the pullback at the moment. I'd probably want to see it stabilize a little bit longer. If I'd bought it, like I wouldn't have bought earlier because it just moving averages hadn't crossed. It just wasn't quite meeting my rules. But nonetheless, if someone had bought earlier, I'd still be happy to hang on and see whether this can, see if it can stabilize, see if it can turn higher. There's certainly a turnaround possibility with it. I think it's one to keep a close eye on, and maybe a trade does develop from it.
Okay, fantastic. PNV.
Too early for me. It's still in a downtrend. It's like it did break below the July low, didn't get very far, rejected that low, and it's come back. But then we saw something similar happen when the June low broke, rejected that low and bounced back, but has subsequently gone lower. So it's not a stock I'd want to preemptively buy at the moment. Like some people would. Some people would say, look, I can buy it here and I can have a stop below the recent low. And that sort of play can work out. But you are sort of like playing against the trend of the market. You're trying to swim against the tide when you do that. Sometimes you can get close to the low and you see a big rally develop. But I think the odds always favour when you're below declining moving averages. The odds favour that there'll probably be another low. So the win rate at that sort of strategy may not be so flash. I do wonder whether it's struggling to maintain its downward momentum at the moment, but I'd still be inclined just to leave it alone. I need to see it above the moving. Like I'm going to get in late. That's just how it is with me. I'll be in late. I won't be in on the ground floor of these trends. But hopefully by doing that, I avoid getting into some that fail. Like look at this period through here in 23. People could have been looking at this not dissimilar to what we have now. Going, look, is this the low? It's tested these low levels a couple of times. It's rejected us. It's rallied strongly into the moving averages. If I buy some at current levels, I can put a stop below the July low and see what happens. And well, as we know in this case, it didn't work. Would have been stopped out. And that can be okay because you might not lose too much. And if it works, maybe you can make a lot. So it's not to say that's a bad strategy, but I just think it's not the strategy that I play. I'd rather get in a bit later, pay a bit more, be above the moving averages, and I'm trying to sort of probably get in at this sort of stage, or maybe it's sort of like this stage there, where above the averages, consolidated, started to break higher. It's be interesting to come back and look at this one, but for me, not quite yet.
Okay. Next one's from Evangeline. It's RKT on the New York Stock Exchange.
Yeah, it's potentially starting to build. It's we've got the moving averages going in the right direction. Got some rising lows. If I sort of like a breakout point for me could have been around mid-July. So we went from below to above the averages, consolidating into the averages crossed, turned higher, bit of a breakout. So somewhere around here could have been an entry point. So if I was in then, I'd be staying in. Like it's potentially in the money now. So I'd be happy to stay in, give it room to move, see whether the trend develops. If I was thinking of getting in, maybe I'd be looking for, could there be some more consolidation while the moving averages catch up? Could we just get like a little bit more of this, and then from there maybe we get another leg higher? Yeah, we don't know, but we often see that sort of sideways structure, like kind of there it is there. So initial pullback, rally back into the averages, makes its way higher. So looking for that type of thing as a possible entry point. So if I wasn't in but wanted to get in, I'd probably be inclined to watch it a little bit more and see whether we get like just some shallow pullback to around the 22 August low. That could be a buy the dip or buy the breakout higher. But interesting stock. It does have those early signs of an upward trend developing.
Okay, Claudette wants us to look at QOR.
Yeah, upward trends in place. I'd be holding if I had it. Probably not buying it. It's had that. That's a big run in what's that? 6 weeks or about 6 weeks, 5-6 weeks. That's a big run in 5 or 6 weeks. There's some signs of a pullback now. So signs of a pullback probably means there's a little bit of time to just watch it if someone was thinking about getting in. But if it can hold on, if it's a shallow pullback, hold on to those gains, let the moving averages catch up. Could be a buying opportunity. Otherwise, it's one I'd want to hold. See how this trend develops. See if it continues to move higher. Wide trailing stop.
Okay, fantastic. James looks ALK.
I've got some of this one myself, and I'm holding. I'm not looking at taking profits. Not looking at cutting it. It's just see how this trend develops. We've got rising lows, we've got rising moving averages. For me, it's a case of just stay on board, see what happens. I probably wouldn't buy it at current levels. It does look a bit elevated above the averages. Maybe there's some consolidation coming, but again, it's wide trailing stop. Try and stay on it. Like is this like a lengthy multi-year pullback, which is now starting to work higher? Could it go to new all-time highs? Certainly could. Probably not in the near term, but that's why we use wide trailing stops to try and stay on stocks for maybe a couple of years, 3 years, and but we'll see how this one develops. I'm happy in there at this point.
Okay, next one's URNM.
So this is I've got the right one, Rods. URNM.
URNM, uranium, I'm assuming. Yeah, one of the uranium.
Yep. So I'll use the US listing. There's a local listing and a US listing. The US listing is better price history. I had this one myself, and I'd had it for ages. I bought this one back in December 2020, and I sold it when prices started breaking down in February, and prices fell, but they've rebounded. I haven't got back into this one. I haven't got a footing back into uranium at this point. I had a go at a couple of local uranium stocks over the last month or two, but they've been stopped out of those, so I'm not in at the moment. Looking at this on its own merits, it looks like we've got the initial rally. Now we're getting the consolidation on the moving averages. Although then I look at the so I've considered getting back into the ETF, but then I look at the largest holding in the ETF. And the largest holding, if I go down to where I've got some uranium stocks. Largest holding is CCJ, which is Cameco. Cameco's had this big run to all-time highs, at least for the last 15 years or so. I think it got higher in the late 90s, early 2000s or something. But I'm wondering whether, due to its big run, it needs to do some consolidation, and that, of course, would probably keep the brakes on URNM. If I was in this, I'd be happy holding it. I haven't bought any at this point because I wonder whether there's a bit more consolidation coming. It's a tricky play at the moment, I find, uranium, because then I look at the uranium price last night, and that's good price action. I like the price action that we're seeing in uranium with this rally out of this base. I'd like to have some exposure. I'm looking for the right exposure. I'm looking for the right setup to get in. URNM, I think this is a good way to play it because you're across. It can be individual stocks can be hard, be it gold, be it silver, be it uranium. You pick the wrong one, the sector can go and you can be left behind. So that's the beauty of the ETF approach, in that you've got like that wide exposure. Look, I guess it could be considered an entry at current levels with a wide stop. I'm probably hold off for now though myself. But if I was in it, great. I'd be happily staying in it. I think uranium's got great potential, medium, longer term.
All right, fantastic. Next one is from Greg. It's FAL.
Well, this is up and away. So, Greg, I hope you're in from down at these lower levels. So this is one of those ones where if I was in at the lower levels and I'm up hundreds of percent, this is where I'd probably consider maybe just shaving a bit off the top, just taking a little bit of profit. Now, I don't normally take profits. Normally, I'm talking about just letting profits run. But particularly with these low price ones, which can be prone to having, there's an example of a steep run, which then gave it all back. I'm just wary of that with these lower priced stocks. They can, they're excitable. They can get going and they can, abruptly come back. So that's why, I'd be inclined to maybe think about taking some off the table. But I'd certainly want to be letting a good portion continue to run, because the reason we get in the position of having hundreds of percent gains in the first place is because we've let things run. So do what's been working. That's letting profits run. But then also maybe considering reweighting, because it does become a substantial holding when something goes up hundreds of percent. I couldn't buy at these levels. It's completely stretched above the 50-day moving average. And the risk of pullback, it's like, and when you get a pullback, that can be significant. Like, look at this pullback here. There's a 50% pullback. It's you buy at current levels, 50% initial stop loss is just way too big. So it's hard to initiate a position, but I could maintain a position with that wide stop. I'd be all the way back around the 100-day moving average probably. But that's how you stay on these big trends, which are volatile as well. Nice one getting on it.
Okay, GNM.
What was the code again, Rog?
GN for Nelly and M for Mary.
M. Yeah, I wouldn't have got this one. If someone had asked me about this one last week, I would have said no. I got nothing I can say about it. It's just meandering either side of the moving averages, nothing to see here, and then the next day, boom. I don't know. For me, these are almost like lottery wins. It's like, what was the trigger to buy this stock? There's just no trigger. It's just got to be belief in what the company's doing, and it's one of those stocks which is going to be ranked so far down the list. You kind of got to stumble across it somehow and go, I think they're going to find something today. It's a very hard one to play. But if someone happened to get such a gain, pretty much everything I just said about Falcon would apply. So yeah, it's nice work getting on something like this. But I'd want to make sure I walk away with something just in case it comes down just as quickly as it went up, because I've seen that happen more than once in these lower price stocks, which just flash to life after showing none. That said, you never know. It's also something big could develop, but we always manage risk. So if I'm up a few 100%, I'd take some off the top, keep some and see where it goes. But very hard situations to get. I think there weren't any signs, I think, that we could have really leveraged off to get this one.
Okay, the next one's from Sydney. Hi, Sydney. CVE. These are on the US markets, both of these.
Yeah, this is starting to. Yeah, it's showing some potential. Yeah, what I like about this is that I like the way it's building. It's made its way back to the averages. It's consolidated along the averages. Averages have crossed. I like this period through here, through June, July, where it's really just consolidated on the averages as it crosses, broken higher, got another sideways consolidation, broken higher again. So it gives the impression that there are bids under the market just accumulating it when it's having those pullbacks, and that's creating the shallow pullbacks. So I'd be happy to let this one run. Could probably even consider buying a breakout. A breakout would have been the day before, but it's not much higher. So maybe you could be bought at current levels with a 15% stop and see whether it develops into something larger. I'm guessing it's involved in the oil industry. Like the word energy, it's also tied to uranium stocks, but doesn't look so much like the uranium price. It looks more like the oil price. So oil's currently not providing a tailwind, and I could be wrong. Maybe it's not oil, but it's not going to get. Had to see which energy sector it's a part of, and whether that sector is giving it a tailwind. If it was uranium, which I don't think it is, it'd be a really interesting stock to look at. This is one I think is worth a consideration.
Okay, next one from Sydney's UNH.
Unfortunately, this is a no. It's downtrend. It's is the downtrend overdone? Is this the stock where the CEO got shot in the street, United Health Group? Remember, Roger was in the news a couple of months ago. I think it may be. I'm not sure. People look up the news and what's going on with this fall. But at this point, it's I don't want to step in front of this one and say, okay, it's fallen enough, it's got to go up. I just have to leave it alone. I wouldn't want to be in it. If I had been in it, of course, that trailing stop sort of gets me out of it. But yeah, trying to punt a turnaround, I think it's just the odds just go against you too much trying to pick turnarounds. Sometimes you get them and you do really well, but often you don't get them, and you just chop up capital. So I'd just rather leave them alone.
Yeah, right. No, I totally forgot about that, but I just Googled it, and it seems like the CEO was shot in December. Anyway, it's next one is QAL from Rob.
Uptrend. Yep, nice trend and play. It's recently broken out of this range. You can see C's generally been moving within that range for, what was that for? That was maybe about 15 months or something. I'd be happy to stay in this one. Usual story, wide trailing stop, see where it goes. Probably not in a rush to buy it today. It's had a good run. It may well now need some consolidation we can then have another look at it then. But yeah, in terms of like staying on board, yeah, I'd be staying in if I had it.
Okay, fantastic. SS1.
Yeah, I think there's some potential with this one. I think we talked about it before as well. It's sort of making its way up along the moving averages, and it's like it'll have a bit of a run, then it will just track sideways, then has another run. I don't like how it's like had that run during July, and then it gave it all back. That doesn't excite me too much. I would have rather seen it like hold on to most of those gains, but it is now holding at the moving averages. A break below these lows from August, a break below the August lows would make a mess of it, and I wouldn't want to be in it. But whilst it holds those, this could still be it could still be making its way higher. If I was in it, I'd stay in it, give it the benefit of the doubt. If I was thinking of buying some, if it continues to just trade sideways along the moving averages and breaks to a new high, maybe that could be an entry point. So yeah, it's looks like it's probably a smaller silver orientated stock, but you can get some really nice trends that emerge. So yeah, for me, it'd be if we get some consolidation by the breakout, I'd be probably cutting it below the lows, or if I was in from lower levels, I'm probably still letting it run.
Okay. Next one is from Yuki. FMG, please.
So Fortescue, I picked up some Fortescue last week. It's just it started to pull back. We've spoken about it before, like with the moving averages crossing. I thought maybe we could have got maybe that sideways consolidation into the moving averages. That's where I was hoping to be able to buy some, but we didn't get the sideways consolidation. Instead, we got an extension of the rally. So I ended up paying a bit more and buying some up around current levels. And let me just compress that. So you can see where the blue horizontal is. You can see it picks up some previous lows and some technical activity and high. So it's a bit of a resistance market, which is kind of nudging through, but it's not really like a precise point. It's more of a general area. So I think there's the potential that some of these big mining plays are turning around. I talked about that when we look at the Chinese market, we get strength in the Chinese market. Maybe we've got. Maybe there's good news coming out on the Chinese economy. Maybe the stock market's leading the way. If we see a turn in the Chinese economy, well, then that's good maybe for iron ore, which flows through to the miners and copper and so on. So I think this is an emerging trend worth considering. See where it goes. See if it turns into something. Same with BHP. Same with Rio. I think they're all giving that. There's potential that something's starting to happen. We don't have an established trend yet. It's early stages, but I think there's enough there to warrant some consideration.
Okay. Final couple. There is another general question around ABB, but we'll get to that at the end if that's okay, Jace. Let's just do RNU first, please. RNU.
MU or INU?
Finelli.
That's interesting. Okay, what I like that it's gone from below the averages to above, and we've had this 4 months or so of just sideways price action either side of the moving averages, and now we're getting the consolidation above the moving averages, and the moving averages have turned higher. So is this starting to develop into something? I could consider like ways to play this. One would be to buy at current levels and which is preemptive. So it's more speculative when you just preempt something. Maybe I'd be looking at giving it maybe a 15% stop if I bought at current levels. And then we're playing on the potential for this to be a sideways consolidation and we get a breakout. Alternatively, maybe I'll wait for the breakout and maybe I'm looking at around 7.6 cents, 7.5 cents thereabouts for a breakout from this range and a rally off the moving averages and go with it that way. There's also the potential that it could sort of make its way closer to the July low, and it forms part of a larger range. But I like that consolidation along the moving averages. So I think it opens up that potential of like preempting another rally. Like low price stocks, like a 7-cent stock, to be able to play a 7-cent stock with a 15% stop, I think is a pretty good. Often we look at these stocks and go, well, you need 40% to play, and it's all too hard. So it's asymmetric in the risk structure where you can risk a relatively small amount, and if something happens to go, well, there could be great upside potential in it. That said, it may not go. It may just continue just to chop and languish. But that's risk reward. If the potential reward's there, well, it may be worth taking that risk. At the moment, we've only got the makings of something. We don't have a trend. We've got a possible turnaround and the possible makings of a trend. But it'll be an interesting one to come back maybe in a couple of months and see whether we've got a breakout.
Okay, and the second last ticker we'll get onto quickly is BMY, please, from Michael. M for Mary. Sorry.
It was M.
Yep.
So a US
listing.
Yeah, downtrend. Downtrend still, I'm afraid. And look, this is a good example of just like, an emerging trend doesn't need to turn into a big trend, and often doesn't turn into a big trend. It's got all those nice signs we look for: the sideways consolidation of the moving averages, the breakout. I would have been saying, let's go with this and see where it goes. Stop below the 100-day moving average, and let's see. And for a little while, it was looking good. Consolidation of the moving averages, another rally. That's all good. We're saying, look, let's not get too bothered by this. It's just a pullback to the moving averages. But then it all comes apart. And this is going to happen. So look at your portfolio and you might get 20% of stocks might develop into solid to really good trends. And then you're going to have a big bracket in the middle, which just does stuff like BMY. It rallies for a bit and then it comes down and the trend just never develops into anything. It doesn't mean trends don't work. It just means that most trends don't develop into super trends, and they don't need to. We only need maybe the top 10% of stocks to really do something impressive, and then the rest can do moderate to modest to mediocre, and then we're going to have our relatively small losses at the other end, and the whole thing can work. Don't worry when you get stocks like that don't perform. That's why I think it's about many relatively small trades as well, because we don't know which trends are going to be the super trends. So that if you cast that wider net, you're probably going to increase your odds of getting a few big trends. And you're going to get plenty of these as well. So looking at it now, it's below the moving averages, consolidating below the moving averages. Yes, it could turn higher and start to recover, but if it does that, I'm happy to look at it later. I'm happy to give up a bit of early upside and just leave it alone for now. Like, it could also just meander sideways for months and tie up capital unnecessarily. It's like I'm not in a rush to get into this one. And if I had played that early trend, I would have cut it on the decline and I'd be on the sidelines now.
Okay, fantastic. All right, let's finish off with a couple of general questions. First of all, yes, Navexa, you can connect that with Selfwealth via a contract note service, Claudette, if you're interested. Then the last one.
I did that this morning, Rog. I've gotten the Vexa and I had some Selfwealth contracts, and there's an email address. I just forwarded my Selfwealth contract from the email, just forwarded it to the Navexa email, and then it was in my account 30 seconds later. So really easy.
Yeah, it works really well. I know that for sure with me as well. So, okay, the next one is, well, the last question. Let's jump on this one. It's around ABB, and this is one that I sold off on a time stop, but that's okay. Yeah, can't have them all. How do you handle reporting season jumps to the up when it jumps to the upside? ABB got away with me on Monday. Didn't want to get in prior to the report in case it dumped. Just wait for a consolidation now. What's your thoughts?
That's probably what I'd do. It's hard, isn't it? Like here's where the reporting looked like I would have bet that the reporting was going to go well, but look at that. There's a gap lower. That may not have been reported, but it's something has come out of the company. I would have guessed it would have been good news, because the trend was moving upwards, and the trend often isn't the direction of the news, but not always. And I would have said the same thing this time around, and this time around it worked. But I can understand the hesitation of someone to act ahead of it, because we do see these, you do get those blindside results where the stock quickly falls 30%. Where it is now, it's really, it's like the back testing will tell me that it's buying it at current levels, buying into the trend over time. It plays out. If we're waiting for a consolidation, like what are we waiting for? We're waiting for sideways price action while the moving averages catch up. In which case, it probably ends up being bought around current levels anyway. If we get a pullback where it starts breaking below the low from yesterday, and rapidly giving back all the gains, well then you know what I'll be saying. I'll be saying, well, I don't like that it hasn't been able to hold on to its gains, so I probably wouldn't want to buy that correction anyway. I think if somebody really liked it, I think it could be bought at current levels. Let me just check the risk on that first though. Like, look, and maybe it's a case of it's 20 to 25% from current levels. That's probably a reasonable. I think that is a reasonable general stop loss. Can this continue trending higher? It certainly could. So if we like it, I think that could be the play. Waiting for a consolidation, it's like, nothing wrong with doing that either. So there are options around deciding what to do, and neither are right or wrong, whether it be bought now or whether a consolidation be waited for. Sometimes when I say, look, I'd rather wait for a consolidation, it's more when there's been like a much more extended trend. In this case, it's been like a building trend, which has just started to now lift off. So maybe going with it could be considered.
Okay, fantastic. Funnily enough, this was in my hope and hold and hope portfolio, which I followed the rule, and it just shows you can't win them all, right? So, but yeah, having a strategy and trying to stick to it is the most important thing. Having a plan to deal with them.
And this is the thing. So, like, I'm guessing, Rog, it might have been around 2022 that you sold it, if it was in a hope and hope.
No, it was more around just a month ago or something, actually, because I bought it just as it was starting to go up. But it wasn't on technical analysis. I liked the company. I could see they were doing a lot of. It was a fundamental, sentimental play. I could see they were doing a lot of things around Melbourne, but they were using my technical rules. It wasn't going anywhere. It wasn't doing anything, and I was sitting on a small loss. And I thought, all right, just let it go. And yeah. Is what it is, right? So
and that's going to happen. It happens to me. Happens to me reasonably regularly. I'll sell something. I'll look. come across it, maybe a viewer asks about it, and a couple of months later, I look and go, I think to myself, I had that one, and I sold it because it wasn't doing anything. It hit my time stop, and now it's up 30%. But I've moved capital to something else, and maybe that's doing something itself. So it's but that's okay. It's like we shouldn't expect we're going to bat 100% in this, and we shouldn't expect to bat anywhere near 100%. There's going to be lots of small losses, hopefully small. There's going to be great looking ideas that don't play out. There's going to be frustration with getting stopped out of stocks, which then go back up. But hopefully there's also going to be some outstanding trends that we can stay on for maybe 1 to 3 years where 200, 300, 400% plus are possible. And you don't need a portfolio full of them to do really well. So yeah, just it's not about perfection. It's about following rules well and letting time work for you.
Yep, 100%. All right. I think we will finish up today. Just remember, everything we say is general advice only. So make sure you do your own research. We don't know your circumstances. We don't know why you got into stocks or got out of them. So please make your own decisions there. We do love doing this show every week, though. So please do hit that like and subscribe button and send in any comments. Down the bottom as well. I'll look at them each week. And if there's a question, then I'll try and answer it the next week. Sorry if we missed your stickers. Obviously, we're going longer every week almost, but we'll do our best as usual. All right. So I hope everyone. Thanks, Jace, by the way. Thanks once again.
That's been good, Rog. Thank you. Thanks for having me on. And thanks, everyone, for coming and joining us.
And we will hopefully catch everyone again next week. Take care and bye for now.